Morning, everyone. Well, we're seeing an undercut and rally take place on the NASDAQ 100 and NASDAQ Composite, and a number of other stocks as well, like Facebook. Those are buying setups that can pose very low risk, as we've discussed a number of times, and also you've seen in the VoSI reports. The models have gone to a stance of seeing the markets going higher from here. Of course, if they don't, if we turn about face here and go back down, the risk on a model like the MDM is less than 1%. So your risk reward is pretty good on days like today. And we all know that QE is still at its maximum, with the ECB saying they weren't going to be slowing it anytime soon. So that's a viable force that has propelled this bull market since 2009. And certainly accounts for the shallowest of floors we've seen this year, due to QE being at all-time highs, record flows, that is. And I think, in this latest correction, I think the NASDAQ actually corrected 4% or something, just barely. So that's a new record for the markets. But it's more of a record that they just haven't been able to stage any meaningful correction all year, and it's never happened like this before. You can go back to 1957 on the S&P, and you won't find a year like this year.
Hey, Dr. Kacher, are you assuming that we've bottomed and the market's going to rally higher from here? I mean, the way I look at it, you've got a logical intraday undercut.
No assumption.
Okay.
No assumption, because like I said, what I like about the undercut and rally is that if the markets slide here, if we turn back around and go back lower, your risk is pretty small. On the MDM, it's less than 1%. So it's a risk worth taking, because QE is in the mix, and I wouldn't be surprised to see the market baby step higher from here. But we're prepared. The key obviously with initiating trades is always knowing your downside and being able to take that downside if it were to occur. So yeah, I use the MDM as illustrative of that. The BVM is more volatile and more risk, but I like the MDM in that the risk is pretty much dialed down on that, and that's using the NASDAQ. When I say 1%, that's using the NASDAQ Composite based on where it entered earlier today. I've gotten questions about, is this finally the time of unraveling, where things go from bad to worse? And it's anyone's guess, because you've got these different variables that are very pronounced variables. You've got QE propelling the markets, but then you've got fears of global recession and whether Trump can get his economic agenda through Congress. And both of those issues are back on the table. It's not like they ever disappeared, but they cause some weakness, consternation in the markets. And we've seen gold as being the fear trade rise up in this environment. And we'd spoken of the market using the North Korean situation as a possible alibi for selling. Just simply because of those, the economic backdrop has remained tenuous at best. The FOMC minutes expressed concern about inflation missing targets, and they've been having this problem over in Europe as well. And there's no surprise there, because slack demand and abnormally low inflation go hand in hand, and they've been very persistent over the last few years. And the Fed may have no choice but to delay another rate hike, as well as delay the shrinking of their balance sheet. I mean, you'll notice that they kind of shied away from making any comment about the balance sheet and just pushing it off to the next meeting. So while the other central banks continue to print money at record levels, then the economy remains very stuck, and the fears are elevating, and that's what's being expressed by the price volume action you've seen recently. And you all know that the focus list names have diminished fairly sharply ahead of this. So in other words, the focus list, just as your own personal watch lists, are a great barometer for market health, because when key stocks can't hold their own and start hitting their stops and breaking support, that's a warning sign. That's one of the best warning signs you can get. You know, certainly the worst warning sign would be trying to listen to the news and things like that. But you know, your stocks will tell you what you need to do. It's kind of like a fine-tooth comb. And you know, commodities and oils. If you look at the CRB index, it's a whole basket of commodities. They're all still in major downtrends if you look at the weekly charts on those. And there's been talk about the Hindenburg omen again. It's been brought up a number of times over the last couple of years. It's fired 5 out of the last 6 sessions, which is interesting actually, because they have a very poor track record if they fire once or twice, but clusters have better accuracy. So you know, it's not a foolproof at all. When it comes to indicators, there's no foolproof indicator. But the last time the S&P had 5 tightly clustered signals was in late 2007, and then prior to that in early 2000, and that was just weeks before the start of major corrections, which culminated in market crashes. So, you know, the Hindenburg, from a logical standpoint, it makes sense. It means it's just more instability and uncertainty that's entered the market arena. And you know, just like with major divergences, it's a sign that there's a growing consensus of opposites that are trading the market. So in other words, if you don't have a whole consortium of people playing the market, you know, which drives the uptrends, you can get more volatility and potential breakdown. And I guess the analogy is when you see a winning stock, a big stock that has had a huge move and it's gone up, you know, hundreds of percents, and then it breaks, it starts to get real volatile at the top. Maybe it is a climax top, but it's very volatile. In other words, the bears and bulls are now fiercely arguing, debating whether this thing should even be going higher. And usually that's the end of the move. You know, that's your sell point. If you didn't sell in the climax top, you sell into the knee-jerk reactions in that phase of volatility near basically at the top of the chart. So at any rate, this Hindenburg omen, you know, it's just best to see it as another indication of market internals that are deteriorating. And as we've said many times, you know, this bubble, the skin of this bubble, I think, is getting thinner by the you know, with each passing quarter. So you know, what's nice about technical analysis and watching your stocks is that you don't have to guess when the big one happens. Just like in March of 2000, you know, I didn't know that the market was going to have a massive bear, that the NASDAQ was going to correct 70%. All I knew is that I was in cash 3 days off the top because all my stocks pushed me into cash. And then I adopted wait and see attitude, and you know, we all know what happened after that. There was very little buying opportunity from that point. So I was able to keep most of my profits for that year, and then 2001 and 2002 were just phenomenal shorting opportunities, but not a whole lot on the long side unless we talk about things like 9/11 and special situations where there were open windows for playing certain stocks long. But at that rate, let's go contemporary here and start talking about some names.
Is that my cue?
It is your cue.
Ah, okay. Talking about some names. Well, I think you've got basically you have an undercut and rally in the NASDAQ going on this morning, and that makes perfect sense. It's also coinciding with news that Trump is going to hurl out Steve Bannon, who is considered something of a firebrand and a lightning rod, if I can make prolific use of useless metaphors. And so you've got the market turning, but it's not clear to me that this isn't just part of an overall downtrend and that we could continue lower. Now, you do get some decent trades off of the undercut and rally. So if you look at Facebook, you undercut, you can see this. You undercut this low, and you could say you undercut this low too, and now you're turning back to the upside. So we'll see whether this actually holds up or not. But in the meantime, that's what you've got going on, and that's a tradable move. So you could be up a buck or two on that if you saw it at the time. Doesn't mean that it necessarily has to work, but that is a setup that you can use. And as Dr. K was saying, what I like about it the most is that you can control risk very tightly. So I'm just watching this market very closely. So because you got a lot of swishing around here, I'm noticing. I'm also noticing short plays like Momo. I came in short this one this morning. It's actually moving lower as the market rallies. So I'm still skeptical of a lot of these names. Tesla, I think, is a natural reaction bounce near the 50-day, so you're going to get buyers coming in. The only problem with that is that it's not holding the 50-day right now, I believe. Well, no, it's just hanging right above it, but it could bust through, so it's not really finding any big volume support just yet. So if we go, let's go through our focus names. This one's kind of extended, so I don't really consider this to be in a buyable spot. I guess you could have bought it at the 10-day this morning if you were brave enough to do that. And then you have what are the other ones on here? We only have 6, right? I still can't remember.
Yeah,
Appian here.
APN.
So you got Appian sitting here along the 20-day line. Volume is drying up. What's our volume rate on this one right now?
Minus 77%. So that one looks pretty ill.
So that's pretty well dried up there. So I don't know, you could test that there, maybe use a 20-day line at 2042 as a pretty tight stop. What are we trading at right now? 2050? So that's really tight. So that's a possibility. I also noticed like Yex and Cloudera, those are names I talked about in other previous Voodoo reports. So I don't know, this market still seems erratic and very news oriented. I'm actually short names. I was long some names on the turn and then flipped out of them and took some small profits, and now I'm actually testing some names out on the short side. Momo has remained a short play all day and it's heading lower. Meanwhile Baba, which is on our list, is extended, but you could have considered this a viable gap up, so you would play that in simple fashion by buying as close to yesterday's low at 163.51 as possible and going long. What happened here? Anyways, so we're up, Dow's up 9. I mean, they had it up 30-some just a moment ago. So who knows what's going to happen from here? To me, it seems like you're mostly in a robo-market where you just have algos pushing things back and forth. There's no real accumulation of stocks. So Bannon is gone just now. Yeah, I saw the news. So tell me something I don't already know. So I'm just seeing if they sell into it. It caused a turnaround in the market, but that could be, again, I was talking about this last week, and North Korean news was used as the alibi for selling last week. And as I'm pointing out in the webinar on Friday, is that once you have that selling on that sort of news, and what that does is set up the potential for a reaction rally once the original news turns out to be not so bad. And a lot of times, the original reason for the sell-off is just they just grasp on the news. Institutions will come in and sell stock down to a certain point. Then they let it go. A few days later, the news turns out to be somewhat benign. The market rallies, and then they can use that to sell into again. So I think that's basically what they did. And you got selling coming in yesterday. It was probably coming in on Wednesday because you can see the market churning up here on higher volume. So that's probably when the institutions were coming back in to sell. Now the question here is, this yesterday's sell-off, what's the reason for it, Dr. K? Isn't there a reason? They got a reason. Whoa, look at that.
They always have reasons.
Right, there's always a reason.
Media, they'll always invent something if they, because they got to have some sort of ad copy up there. But
something, right?
Yeah, but it was this disruption in Trump's cabinet and the question of whether he can get his agenda passed.
It's all that stuff.
Minutes that came out the day before, which were a bit concerning because the Fed is now kind of backing off on a possible rate hike in December, as well as just deferring the shrinking of their balance sheet to the next meeting. It's like the central banks are great at kicking the can down the road and deferring responsibility. So that wasn't real nice for the markets to sit with. But that's the beauty of tech analysis. It doesn't really matter what the reason is. All you know is that your stocks are getting hit, and that's all you need to know.
That's right. Anyway, so that was yesterday's sell-off, and of course now we have news that Steve Bannon is out, so that's a sign that the Trump administration is getting it back together again, and blah blah blah. And so they're rallying it, but it's also logical in the sense that you can see the technical action showing that we're in a position for a rally. Now, if we could carry as far as a 50-day line, and that's a possibility, but it's not clear to me that that will happen. So I'm very interested to see what happens here. Going into the to the weekend, rather. It's not a long weekend. When do we have? When's our next holiday? Is it Labor Day?
I think so.
Okay. Exciting. Let's see. Okay. Here's one of those silly questions, and I don't really understand what you're talking about, Paul, because if you've been paying any attention to anything we talk about, I think you could answer the question yourself. But you're asking. How much weight do you attach to bongos, force indexes, ATR, and MACD? I attach little fish weights to them. So they're maybe like an ounce each, I think, or maybe quarter of an ounce or something like that. So that's how much weight I attach them. I don't really understand what that question means. If you're familiar with HES Investor software, you know that the charts that I use, which look like, hold on. Look like this. They use bongo, kahunas, force, whatever, and as indicators, and so I look at them. It doesn't necessarily mean that I rely on any single one as a do or die or all or nothing sort of signal. You kind of look at them all together. That's how you use indicators. So I mean, I would think that if you've been watching these webinars for any period of time, you kind of know that. So kind of a silly question.
Also, some of these indicators, when I get questions of this nature, it's contextual. Some of these indicators will apply in situations greater than other indicators. So, that's, of course, it takes a lot of experience and learning to develop that sense, which is why there's no real substitute for actual experience in trading stocks, in real time, because then you get a real visceral sense for how to operate, which is essential, but I take an opposite view of Gil in terms of stupid questions. I mean, yeah, there are stupid questions, and that's what he's labeling them as such, and I agree. But I think that the more totality of stupid question is great, because it means that the person will then have an opportunity to learn from their stupidity.
Oh, you're being PC again. Give me a break. My point is simply this: anybody who's been watching these webinars or watching our work for a period of time, they know I use this chart. And we already show that we interpret everything within the context of all the factors that are going on. So to ask us how much weight we attach to any single indicator, they should know that we don't. So especially if it's someone who's been around for a while. So can you defend yourself, Paul? Anyways, that's my view.
I do like it. It's a bad question, but then all the newbies here, because we've had a number of.
Well, there are some newbies, but Paul doesn't get away with asking a question
right,
because he's been around for a long time. So
the newbies,
that's it.
That's not a good question.
Anyways, we gotta have a good laugh with that one. Anyways, the market, the Dow is starting to fits out a little bit. I don't know. I wouldn't be surprised. I've got some shorts out into this. I actually was long Tesla. I came in short, covered on the moving average undercut and rally. It turned around. I sold it. It's now back below the 50-day, actually, just barely. Oops, I'm using the NASDAQ chart over there. The reason why this is a NASDAQ chart is because it's programmed to have the volume on the bottom. Otherwise, e-signal charts don't include volume. Anyways, where were we? Let's go back through the names. There's all of 6, and we still can't get through them. So we have ANET we went through, Appian maybe in a viable spot, BABA, extended now, but I guess you could have jumped on it earlier. What are the other 3? I think we had Netflix.
We got Netflix, and Bison.
Yeah, Bison's been acting pretty well, but Netflix trying to hold the 50-day. But the way I look at this is it's already failed on the Bible gap up, so forget that. I'm not even interested. It's maybe good for a trade off the 50-day, which was possible. But it looks suspicious to me. And I think that if you look at the weekly chart, it's kind of kind of extended up here, so maybe it's going to take more time to build a base, but I don't know. I'm not so convinced. Any Netflix lovers out there who beg to differ and see this as a awesome optimal buying opportunity or entry point here? No? All right. Let's see. Dow's now red. So I'm short Tesla again. Short now. This one looks like a possible short. I want to look at the 620s if I can find them. Let's see. What does the S&P look like? Just see, the S&P had a churning day on Wednesday too, and it's also got a little undercut and rally move, but it's not rallying back above the prior low. It tried to, but it's failing. So to me, that's a very subtle clue, and I'm willing to play some things on undercut and rallies if I see them in real time, especially if I flip from being long to being short to long. But then sometimes I can go from short to long back to short again. So, I don't have a rigid view. I think you guys have been around for a while. I know there's a lot of new subscribers, but if you've been around for a while, you know by now that I don't take a bullish or bearish view of the market either way. It is what it is. I think it's a robo-market. There's a study done, I think it was Goldman Sachs, showed that the bulk of the buying in 2017 has been corporate buybacks. I saw an article the other day, I think by JP Morgan, that all but 10% of the volume is done by machines. So it's a robo-market, and I think that accounts for a lot of the weird action that you see all the time, and the sudden breaks to the downside, and then the market looks ugly one day, it's down 270 Dow points, and they gap it up the next morning. They tried to do that this morning, but they really couldn't get it going. So, you're sort of in slop land right here. So I think if you got short up on the churning day and you see that, I saw that, I got short that day and then came back again short early in the day on the rally in here, and that worked out pretty well. So 620 SH. What is that, a stock, Scott? SH? ProShares, what about it? Do we just get a buy signal on that? That's a possibility. Wouldn't surprise me. I think Tesla flipped out. I was watching it, it was hanging right around 350, and then all of a sudden it just flipped to the downside to like 348 and change. Now that's where we're sitting, right around 349, which is right at the 50-day line. So this is kind of funky though. This whole market's funky, and it's very difficult, I think, to play with the idea of catching some sort of a consistent trend, because we can see that the action here, especially on the NASDAQ, that's very choppy and very erratic, and usually is indicative of a major top. But of course, we haven't seen it yet, but it doesn't mean that we can't. And I think, the fact that they were able to engineer this whole rally, you see this rally here on light volume, and that's basically was an NDX rally driven by the NASDAQ 100 stocks. And then you have the, oh, come on, baby.
We had a similar low volume rally in May.
The Dow, and it went to new highs. So, the Dow recently, and this is something that kind of tipped me off that everything wasn't exactly right here, was you had this 30 stocks in the Dow, and they were getting some volume on certain days, but a lot of it was churning. So you were churning around. If you look at, let's see, first day up was churning, but it continued higher. This day up here, right here, was churning, and then as you got to the top, you're running out of gas, and then you roll over. So now it sort of looks like you could you're bouncing off the 50-day. That's another thing that sets up the rally today. So it's logical, and I think you'll see the markets just kind of bounce along as they head lower or head higher. They just chop around, and it makes it very, very difficult. SH is inverse S&P ETF. So what are you saying, Scotty? That it's a buy signal? Or I'm going to pull it up here. I just got to clean up this mess here and find my chart. Here it is. SH 620. Well, I don't see a 620 buy signal. I do see a MACD cross here. It's had a couple, so it's trying to turn. But I don't know. I still think you're in this sort of soupy, goopy sort of environment that's just kind of choppy and not really well defined. So,
well, and the market pushes on the screen as well, because that NASDAQ chart you brought up, expressing the low volume rally in July was replicated in May as well. So, you know, and after May, we had that correction that lasted about 6 weeks. So it looks like, you know, at best, we're going to have something like that where we chop around for a bit. And at worst, we'll actually have something more meaningful in the way of a correction.
Yeah, so I mean, it's pretty, just pretty goopy. Anyway, so what's your point here, Scotty? SH is inverse S&P ETF. Okay, so we know that. So what about the 620? What is it you're seeing? A buy signal? The market goes lower from here. You know, I'd almost agree with you. I think that we'll probably roll over into the close. So that's why I'm not long anything now. I have backed away from the quick flip trades, and I'm not really sure if my shorts will work, but we'll see. I mean, I did pretty well the last couple 3 days, so I've got some cushion here. But if everything was to blow apart, I'd be happy to take it before the weekend. I think, though, I would sit in cash over the weekend just because you saw over on Monday morning what happened. You had this massive gap up, and I think this market is susceptible to massive gaps in either direction. I think we've seen that currently. So I think it's a dangerous environment. So take what you've made, and you know, I'm playing, keeping things close to the vest, not really looking to deploy my capital broadly, and you know, in any sort of a longer term, or shall we say intermediate term fashion. I'm in flipping around and swing trading things if I can, but I'm very wary of holding things overnight, and that means shorts or longs, because I just think you're in a bizarre environment. Let's see. Somebody thinks we're amusing, Dr. K. I think we are. I'm pretty amusing myself. I amuse myself all day long. All right. Let's see.
Well, it's the point if you're not going to have fun, right?
That's right. Okay. What else? What else are? I mean, what looks good? You know, I look at these optical names. This is a leading group. They've blown apart. So I've been having fun shorting these, and but this one looks like it needs to rally back up to the 50-day moving average. And let's see, what's another one I've been shorting and making some money? FN breaking down through the 50, and then it has become shortable there. And now it's hanging under the 200-day line, so that's looking grim. I think another one that was hot shot, Ocular, that was or a Claro. I don't know why I call it Ocular. Isn't there a company called Ocular?
Yes.
Was that some junky little thing that made glasses for Oculus? No, never mind. Anyways, what do we got here? We have a nice break, and so the whole group looks like crap. So Sienna, Finisar, I mean, even this one, Corning, blew apart. So that, I mean, this is a major area of leadership in the market, and I don't see what's taking its place. If you're looking for financials, they're not happening because now they're just rallying back up into the 50-day moving average on the XLF. So you know what's there? J.P. Morgan getting tagged. Goldman Sachs has already been tagged. Bank of America getting tagged. These are undercutting rallies, so they make sense from that perspective, you know, that they're undercutting prior lows and trying to rally on an intraday basis, and this coincides with the Dow bouncing off the 50-day line and the NASDAQ and the S&P undercutting prior lows. Yes, the NASDAQ, I think, is the only one, however, that is clearing back above the prior low. So the S&P is still below it. It did try to get above it earlier. You can just barely see that on the chart there. So let's see. Oculus owned by FB. Thank you. I'm getting things confused, but I'm easily confused. Except by the market, you can kind of see, you know, you have to think like an algo because basically that's what's doing most of the trading. And I think that's unfortunate because it means that the typical patterns of accumulation and distribution by institutional investors, mostly, which were mostly comprised of mutual funds, hedge funds, bank trusts, etc., have been replaced by a cadre of of algos and HFTs and ETF trading algos, I think, because I think the ETFs have a lot to do with it as well, because they have to be adjusted and rebalanced, I guess. I don't really know the mechanics of how an ETF works, but I imagine that they're a factor, and they balance the ETF by sending computers out to do their dirty work one way or the other. But you're seeing there that you have nothing happening with financials, and so there's nothing to do there. So I think what you're doing is you're looking for stuff like this. Maybe this will have a pop and you can play it. I was looking at Twilio. I even traded this thing off the lows, but it's done now. It runs into the 20-day line, and that's not looking so hot. What other ones? Yext. Trying to pull a little. I guess you're undercutting these lows, but I'd rather see it undercut this low. But it's look at how erratic it is. So I mean, Appian is probably the most coherent right now, but notice that it's a recent late stage type of failed breakout. So try to break out here from a cup with handle. Oops, where's that handle? And then you break down here, and now you're doing the L formation. So is that going to be a Louis that goes from an L to a U? I guess we'll find out, won't we? But who knows? I don't know. Anyways, but net, this is just a goofy market, and I think a dangerous market. So if you're a long only type of player, I think you're raising cash, and the fact that the focus list began to diminish to, it was 6 names 2 weekends ago, correct? Am I correct?
I think that's right.
Okay, so that was
most of them came off, started coming off, what, like earlier 3 weeks ago?
So, yeah, so it was pretty clear in terms of the names that things were getting to a point where we're going to get sloppy, at least, and that's what's happened. And we've had that going on for at least the last 2.5 months, really, maybe, 2.5 months. So do we get more of this, or are we going to blow apart? I don't know. But for those of you who play the UVXY, though, it's been kind of fun. I think I'm basically, when I'm playing this thing and I'm using the 620, I'm looking to catch inflection points. So and also within the context of what the market's doing. So let's go back to Wednesday when I was seeing churning action in the NASDAQ, which was being mimicked by the S&P 500. Okay, so you're seeing this after a sharp rally off the lows. Okay, so when I see a rally into an area of resistance, or somewhere where I see a technical signature that might tell us we're going to inflect the other way, that's when I become interested in the UVXY. Because after yesterday's big move, I just leave it alone for a while. I don't come back and try to keep playing it. The temptation is that when you make a nice gain, and if we look at this thing, that goes from, I actually had, what was the buy signal? The original buy signal was 28.43 on Tuesday, right, Dr. K? And then I had another one on Thursday, or was it Wednesday, at 30.40 something, right? Is that right? Do you remember?
It was, we had the first buy signal was on the 16th, so that was Wednesday. And it got undercut, so that what I'm doing, I'm looking at all these scenarios, and that would have, you would have sold out at a small loss. Then you may have wanted to buy back simply because of the churning going on that day. So the market didn't look all that good.
Yeah, but then you had a clean signal here yesterday, I think it was, right here, right at around 32 change.
We had one at the open where the VVM took a position, but then that was undercut. It was stopped out. Now, here's a lesson in psychology. Because the VVM had gotten tagged 3 times in total with small losses in VVXY, it shied away from the next buy signal, which was actually a profitable one, because that would have been, that would have been up 6 or 7%, because you'd sell it into the stretch and cross right at 7:20 a.m. Pacific time. And then you would buy it back again later that morning, about 90 minutes later at 8:30 on that, when the lines crossed again, although it looked a little bit like it was sticking up. But in the context of where the markets were at, there was a lot of heaviness to that day. So because you have that's part of the sizing up of, if you got the tailwind of a heavy market at your back, then you should be more liberal in taking these signals. And that was my mistake of not taking the signals. And that next one was immensely profitable. So this is a new style that I've been working with, integrating into the model. Gil had noticed it earlier this year when I think it was in May or something. We started getting these one-day wonders where the market just get hit for a day, and then you start to baby step higher. But the UVXY could be played in those circumstances, and I started looking longer term back at charts and noticing that there are enough of these special circumstances. Although I would argue that this year is unusual in that we're getting one-day wonders that don't follow through. In the past, the VVM would actually go on a buy UVXY signal at the end of the day after a really bad day, because that was usually followed by further bad days. That would apply to 2009 to 2016. But this is a different year, and part of good trading is being able to roll with the changes. And so, at any rate, this is a material change that's taken place. And when you have the wind at your backs, when you have a strong tailwind and the markets are falling apart, you can play the UVXY not just once, but you can play it multiple times. So, for instance, if we start going into a considered downtrend here, maybe like of a variety that we haven't in a long time, then you're going to have opportunities to make, maybe 10%, 12% gains in UVXY. But you can't get piggish. You got to take your profits when they're there. I use the stretch and cross when it spikes. On the stretch and cross, that's a good sell signal, to take your profits. And you usually see that formation when the UVXYs had like maybe 4 or 5 minute bars in a row that are straight up.
I'm watching the market come off. I think you have another round of alibi selling. So in other words, like I was saying, yesterday's sell-off was blamed on Trump's administration woes and the fact that you had CEOs leaving his various councils or whatever the hell they are. And so when you get the news on Bannon today, that triggers a rally, but then the institutions just sell into that. And that's classic alibi selling action. First of all, you sell on the original news and you let it come back up as the original news becomes softened up a little bit, and that allows institutions to sell. Remember that institutions or the market can come under distribution even as it continues to rally. And I think when you look at this market, doesn't it look like you've had, we were talking about this last week, Dr. K, right? You've had a lot of distribution in here. I mean, all this volume in here, selling volume, and especially in this pattern, light upside volume relative to heavy downside volume. And you could see that in the last, say, 3 weeks or so. So that's what it looks like to me. It doesn't look happy. And I think the danger is that things just blow apart. And anyways, I see Tesla's breaking down further. I'm short that. So that was a long and a short. I'm sorry, a short, then a long, and now a short again. Just flipping it for Livermore points, although not many. Almost negligible, really, in the grand scheme of things. Because if Tesla's going to break down, it's going to 300 from here. So. Anyways, now we're at 347.99 on the offer. So now we're a fair amount below the 50-day moving average. So any other questions? You guys are all pretty quiet. What else am I looking at here? Take Two was one we still have on the list, but that's up there and you're not going to buy it. In fact, if I owned it and had a nice profit, I'd be inclined to take some, or at least use a 10-day or the 20-day line as your trailing stop on it, because I do think the market's in trouble and we're starting to roll over harder. So you could see a big bust into the close here. That's a possibility. Would I hold shorts over the weekend? Probably not. And if we gap down big on a Sunday afternoon in the futures and on Monday morning, I'm going to be ticked off. But am I willing to take the risk when I'm up for the year and doing just fine? Do I need to take that extra risk? I think given the environment, given the propensity for news-driven jerks one way or the other and gaps up and gaps down, it makes it difficult to navigate. So I know some of you guys like Scotty who are asset managers, you got to sit there for the most. I'm curious, Scotty, I don't know if you can, what do you do when you get into an environment where the market could pull back 30, 40, 50%? Do all your clients get smashed? I got to assume, because I know you and you're pretty smart, I got to assume that you take some defensive action. I'm just curious what an asset manager does. So you're basically, okay, so you're saying you hedge with the inverse ETFs. You raise cash and take profits. Okay, so you're active. You're an active manager. See, I knew you were smart. Anyways, and you have impeccable taste in vodka as well. So anyways, I can tell you also, broker friends of mine are having trouble. Business is slowing down. Yesterday, I was at a bike store buying my son a new bike. And so now, in the age of Uber, he turned 16. When I turned 16, I could not wait to get my license and start driving. And I said to him, you know, this is kind of odd that been your 16th birthday and we're buying you a bicycle instead of a new car. And his opinion is that with Uber and a bicycle, what else do you need? So we'll see how he feels about that later on. But
Well, that's
bike
actually.
store owner was complaining to me that I don't want to lose my train of thought here, Dr. K, because it will derail easily. So give me 1 second. But the owner of the bike store was telling me that sales have recently, you know, in the summertime sales pick up, but they've actually diminished. And then last night I was at a favorite Lebanese food restaurant, and the manager was telling me, he's like, "'cause there's nobody there," and the manager's like, you know, all of a sudden our foot traffic has just dried up. They do catering. He said, without our catering business, we'd be dead right now because they're not seeing any foot traffic. And I'm wondering if the economy isn't slowing up a bit here. Anyways, go ahead. What were you going to say, Dr. K, about the Uber bike thing? You're an Uber
Alex,
bike guy, aren't you? You have an Uber. You use Uber and you have a bike in LA.
I got my I bike all over the the beaches here, so I never even need an Uber for the most part because people come see me, you know, here on the beach. But I use Uber for everything. It's the first time I've been in LA where I don't need a car because it's like having your own personal chauffeur. You can get work done while you're being driven places.
Right.
And the price point is so cheap that it actually, from an economic standpoint, like if you're a student or something, it would make sense to just Uber rather than to own a car, unless you're driving a lot. But if you're doing, you know, the occasional trips, it's a lot cheaper. And they've studied that these Uber guys are barely profiting because the profit margins are so thin.
Right.
But it's the way of the future, you know. And we are going to have automated cars. That started out in Mountain View, actually, with these automated vans, transport vans. So that's going to spread into automobiles, personal.
Okay. Here's someone else. All right. Enough about the Uber. Okay.
I'm all done.
Okay. But somebody's saying, Joe, who we know, everywhere I go, I ask, nail salon business down, coffee shop business down, local pub business down, dry cleaner business way down. Mechanic can't keep his head above water. I know my mechanic is always busy, but yeah, I think the economy is slowing down. And again, remember all this baloney about 1.2 or 1.3% economic growth. That's adjusted for the government's measure of inflation, which they claim inflation is 1.2%. Anybody who goes to the store knows that it's higher, perhaps 4, 5, 6, 7, 8%, depending on what source you use for the data, for the real data. And so if you just adjust for inflation, GDP has been negative throughout the Obama administration. So all this is a bunch of BS, and I don't think Trump's going to fix anything. I think people are on drugs, and I never thought that a single person is going to change the bureaucratic, shall we say, what do they call that, perpetual motion machine of the current bureaucratic government entity that just wants to borrow and spend repeatedly, and it doesn't matter what party it is. So I don't think he's going to fix anything, and nobody's talking about this $20 trillion in debt, and we've got the debt ceiling debate coming up. So we're going to see what transpires after all that, but I don't think Trump fixes it. I don't think he can, and I think he does a lot of stupid stuff. He gets sidetracked with a lot of stupidity, you know. Anyways, but I'm sure we can all Gavopoly. Exactly, Judd. You nailed it.
Yeah.
Food costs are down. That's true. Why eat out when it's healthier and cheaper? Way cheaper to eat at home. Good point, Joe. What were you going to say, Dr. K?
Dakota is one of the voices of reason out there, as well as Jimmy Rogers and some of these other luminaries with track records. But you know, the recession has been with us. I mean, I guess based on these fudged numbers, we're not in recession yet, but they're fudged. So if you actually take the real numbers, the world has been in a recession for probably the last couple of years at least.
Yeah. So it's all BS. So something bad is going to happen. And of course, gold has been rallying. Now, what I think is interesting about gold, and of course, you know, they talked about last week, this was the rally in gold here on nervousness about North Korea. And then now we got the rally in gold on nervousness about the Trump administration. But the reality is that the GLD undercut this prior low here back here, and so you had a big undercut and rally, and that rally has continued. So all this action, despite this and this being attributed to North Korea, and then yesterday's news headlines, whatever, about the Trump administration, are really just continuations of this original move that started back here in early July. And so we also noticed that you have a, let's see, where is it? Right? No. Right here? No, right here. Pocket pivot at the 50-day line, and then you come and test the 50-day line, and then boom, you're out of here again. Now you're back at this high. So, you know, I don't know if that means you're at a near-term top, you're going to pull in, but I would not be chasing gold on strength. I also think that if we get into an environment where liquidity has to be raised pronto, they're not going to be holding on to gold, they're going to be selling it, because it just becomes a fungible asset to raise liquidity, and it will be sold along with everything else, just like we saw in 2008, despite the fact that gold came out of that pretty nicely eventually. So that's something to watch for. But in the meantime, I think that you don't want to buy it up here. So anyways, who likes gold? Anybody love gold? The deep state, that's it. I mean, it's true.
Yeah, there you go.
Session
100%.
ahead, it was bound to hit the new presidency. It's yeah, agreed. And he can't do anything to stop it either, Scotty. So, you know, he's not, and I have to say, I know he's not a politician, but I think he could exercise a little more common sense than he does. He's just kind of a little bit out there at times. So I'm not going to question anybody's intelligence if they become president. I know that's popular to call presidents stupid. If you're on the right, you call Obama stupid. If you're on the left, you call Bush and Trump stupid. But the bottom line is they're president and you're not. So who's stupid? Anyways. What else? What else? Here's Square. Square, okay, Square setting up to do a little moving average undercut and rally and then turn back to the upside. Nah, it's going lower. I think it's topped out. So, what else? Any questions? We don't really have any questions, huh? The gamers, the video gamers are finding support in logical areas, but not going anywhere. But I don't know. I'm watching all these groups to see if they start to break down. Electronic Arts is acting okay. We looked at Take-Two. That's been on our list. That's the strongest one in the group. And Baozun has, just like it's been the strongest one in the group, that has been on our list along with Baba. Well, we have taken things like Momo and JD off. JD got whacked after earnings, and now it's a late-stage failed base here. Just like that. And it could have been shorted up along the 20-day moving average on Wednesday. Believe it or not, if you're onto it. Are you still looking at NTNX? Well, it's on my watch list, but it's just hanging along the 10-day and the 20-day line. Volume's drying up. What's our volume level on this turkey today, Dr. K?
We're at minus 43%. So yeah, it's drying
So
up.
it's drying up, but the one thing I don't like here is you had a move yesterday at reverse on heavy volume. I think this could test the 50-day, so I'm not going to buy it here. I'm just going to hang out and let it be. CTRL, that one looked Control 4, I think that one is called, that they make home control system. Oh, that was looking grim yesterday, so it's gapped up today. Well, you know, you should have bought it yesterday. So now that it's gapping up, what does that mean? I'm not going to buy it. That's for people who buy breakouts. People who buy stocks according to the old, tired, antiquated methods of Can Slim. What else? I notice you have names like Weibo hanging in there, and they're majority owned by Sina, which is hanging in there. But NetEase has been coming apart. So a little bit of a mixed bag. So you're seeing some groups, you know, some of the key names in some groups breaking down, like JD and NetEase and the Chinese names. But there are also some that act pretty well, like Baozun, Baba, Sina, Weibo. I think there's also this. Is this At Home? Is this a Chinese name? Auto Home, rather. I'm sorry. Why do I want to call it At Home? Does anybody remember At Home from the 90s? Yeah, they're out of business.
Yeah, no, it's a Chinese name now. It's Auto Home.
Yeah, Auto Home. Does anybody remember At Home? If you do, you're dating yourself. But I remember that as a big hot stock in '99. And then I remember one of the institutional salesmen bought a ton of it, and he was going to hold it for a long-term hold because this stock was going up, and he eventually just got blown out of it because I think they went down to 5 or something. It's amazing, though, how people get sucked up into greed so easily. And they think that things that are going to go on forever. That is not the case. Just like this market will not go on forever. TTD, that was another, yeah, the trade desk did a nice UNR. So you could have caught that for a decent trade, you know. But now I say, you know, be wary here. At least I would be. I don't, you know, the way things are acting, I don't know. We'll see how we close. But I'm thinking we're going lower one way or another. So maybe this, you know, tune in again on Monday and we see where we're at. Maybe you get a nice rally to short into like you did this morning in some names, but not a lot. I mean, they had the futures up, I think, 20-something overnight. But that, you know, is just like, it's what I call the QE carry trade. And a carry trade is essentially the idea that you borrow money at a low interest rate with the idea of using it to buy an asset that will produce a higher return, whether that's an interest rate, which would be, which is what you do with Forex and interest rate arbitrage, currency arbitrage. But in this case, the idea is you use QE to just drive the market higher. And since the QE money costs you nothing and you're a big institution, you just drive everything higher. And then that sucks in other money, and then you can sell into it eventually. But that's the QE carry trade as I look at it. You've got cheap money flowing into the market and plenty of it, and that keeps driving the market higher. But that creates a bubble that when it is finally popped is going to be very brutal. And I think we're in a position where the bubble in 2017, whether it resolves itself in this year or next, is going to be a lot worse than 2008, which was similar to 2000, and be worse than that. So have you talked about cloud guys now? Well, I talked about being short now. It's starting to wiggle downward now a little bit, but these are all potential late stage failed bases. You can see this tries to break out here and it fails. I mean, that was actually a pocket pivot, and I was willing to give it a chance, but once it busted the 20-day, now I'm interested in shorting rallies up closer to 110, and that's what that looks like. Now is pretty interesting, and I think this also shows some of the manipulation in the market. I'm sorry, not now, workday. What am I talking about? That's another potential late-stage failed base. And look at how this thing, it breaks out here and it fails. And then it turns around and it rallies on a pocket pivot volume signature and breaks out again here. But that fails immediately. So, I mean, but what is all that? Who's doing all that? To me, it's just algos pushing things all over the place. That's all it is. And if you think it's, you know, institutions buying and selling, so I don't know. I don't think so. So the trending action of the 80s and 90s and perhaps even the early 2000s, I think is done. Anyways, it's now just a robo-market. That's what it is. Can I copyright that? I think that David Stockman actually made that up, but I think it's very applicable. You know, especially when you have firms that are doing studies showing that all but 10% of the volume, or 75% of the volume, or 84% of the volume is being conducted by computers and algorithms. So, anyways. But you can see Workday is a kind of a double failed late stage base. You have CRM, Salesforce, I believe, coming out with earnings on Tuesday. Is that right? And look at how it did the same thing. It tried to break out, and now it's kind of come back in. So they look like potential late stage failed bases in the making. So I would definitely be keeping an eye on these puppies because these could become actionable. Anyways. And that's one thing to watch for, are just groups. If groups start busting apart, then you might have some decent short sale targets on your hands. That was the case with something like a Light, which had already failed on a breakout. And this one I tagged last week. You had to be kind of quick in the morning, and it reversed here. And I was shorting up 63.64 because I figured if AAOI, Applied Opto, is breaking down, then this is probably going to reverse after earnings. So I was just watching the 620. I think I got a MACD stretch and cross, and I took it down at that point, and the thing broke down. I've covered it on this undercut, but I'm not going to whine about, you know, what is that, a 10, 15% profit in just a couple of days. And it's kind of, you know, now you're just kind of chopping around as you head lower. So I figure it's going to test the, let's see if we're testing the 200-day, I'm sorry, the 40-week rather on the weekly chart. Not yet. So it might bounce up there. So in the meantime, I'm watching some of these others. Watch the clouds. Maybe they break down after Salesforce announces earnings next week. I don't know. Maybe they break down today into the close. And I know I'm short now, so obviously I'm looking for that to move lower, at least test the lows of the day, maybe go through them if we start to sell off. But we still have a little over 2 hours left. So GBTC, yeah, notice that See, this is how, okay, if you're buying Bitcoin into this move, you're an idiot. Okay, I'm sorry. And even if you're buying it up in here, you're an idiot. If you wait for the big fake out, which is the undercut and rally here, then you could have bought it, and then you catch this move. Now I would be selling it. See, we're starting to sell off now. So, I don't know. I think we're heading lower. We'll see. But I think I pointed out this undercut and rally move in the GBTC. Is that right? Yeah. So, but we'll see what happens with Bitcoin. It's to me, it's a bubble, and it benefits from the fact that they're relatively thin markets. So, and while a relatively thin market can be driven up like this, when everybody starts to sell, then the relatively thin market will work its magic in reverse. So, I think you can play this quickly on the technical setup when you see it, but up here I'm not going to be buying it. But anyways, that's a whole nother webinar.
Yeah, it's a different topic, and I get a lot of those questions, which I don't entertain out of the scope. But just I want to add that Bitcoin's had many bubbles since 2009. This is going to be another mini bubble. Yeah. Meaning it's going to blow, and then it'll correct, and then it'll get right back up because of the inherent.
And then when everybody says that that Bitcoin sucks, and look at what we told you, it's a worthless piece of garbage, that will be the bottom.
Yeah, exactly. Right. Exactly. So, I think that long term. I don't know any long term holders, but if you've been sitting on this long term, then you know what I mean, because then whatever you bought it at you probably added a 0 or 2 to whatever you paid. Yeah. And you're sitting hugely in the money.
Yeah. So. Anyways, all right. Somebody says, I have several clients asking about Bitcoin. Must be a top. Now they're asking about it. Yeah. Anyways, that's all I have. I want to get back to trading. I think we're going to have an interesting close, and I've got some shorts out right now, and they're actually working. Tesla is one of them. Now is one of them. There are others. Momo. We'll see about that one. They come out with earnings next week, so that's not one that I would be working into the earnings with the idea of holding it through earnings. If we can get a breakdown in it quickly, I'll trade that. Anyways, you guys, have a great weekend. We'll catch you next week. Good luck. And, my watchword is be careful. Or is that 2 watchwords? Or careful. No, caution. Yeah, that's it. Caution. So just be cautious and be nimble. And don't get caught if you test it undercut and rally setup, which I did earlier, but now they're all starting to plop out here. So the Dow's down 24, Nasdaq's up 5, starting to flip out. Doesn't look too hot to me. So I would be careful here, and if you're a short seller, watch for new groups like possibly the clouds. We're seeing some breakdown there, possibly the gamers. Anything that's been basing and is currently looking like it might want to try and break out. And if you get a failure of some sort, you can come in and hit that and catch it like I did, say, with the Lumentum last week. Anyways, thanks for showing up, you guys. We'll catch you next week. Take care.
So long, everyone.